The name of the game in the commodity complex is range-bound trading. Zook, let's take a look at gold, because actually in the past 5 minutes, there's a big stick down there.
Well, certainly after such a big run-up over the last couple of days and getting back over 1,200 when it looked as if we were going to take out the lows and head towards 1,100, it takes a little bit of the wind out of the sails, and a little bit of a couple of dollar pullback, not a big deal this morning.
Are you surprised that it got over 1,200 this week, despite what's happening with the FOMC and, of course, the Greece deal, whether it's going to happen or not?
Well, certainly we found every excuse to hate the gold at 1160 and every excuse to love the gold at 1220, 1230. So that 1,200 number that we looked early back in January and thought we'd be range bound with a lot of volatility still holds a lot of validity. So at this point, that is going to be continue my strategy, and 1,200 just seems to be more of the rotation number to rally and sell off from.
Let's take a look at copper. The red metal has been under some significant pressure lately. Actually, if you look at longer-term charts too, there's a big downtrend there.
Certainly copper, after everyone had gotten long and open interest significantly high up at the 290s, they did trash those longs and got us down into the 270 region. After that, some technical damage was done and they began to pile on the short side. Big development this week and or late last week was some cancel warrants, which is the ability for people to take metal out of LME warehouses, had been significantly low. And had a big jump, which means they put material back on warrant on the LME to the tune of 40,000 tons in a short period of time. This jump gave up the clue that the long dominant, rumored to be 70 to 80%, had given up a significant portion of his position, pairing it at least in half, probably down to 30 or 40% of the market cap. So at that point, the people felt they had this long on the run and did push a little lower. Material showing up in the LME and NYMEX, and poor figures continuing out of Japan heading into the summer season. Certainly the bears are fully invested at this point.
So is that like what we're seeing in the energy space? You're almost seeing a copper supply glut, just like we see with crude. Is that what's happening there?
Copper is its own animal. Supply and demand forces actually taking hold, and China is the story there. Crude oil, certainly the 40 number had been excessive to the downside, and this rally back, and I think we have a rotation around the $60 number. We've seen a number of attempts at the 62, a number of failures at the 57 number, so a little bit of a range-bound volatility within the crude after such a precipitous sell-off and then rally back.
Fundamentally, are you bearish here? Because even though there was a drawdown for the 7th week in a row, the products aren't going anywhere. There's no demand for the refined product. No,
I think with the summer season all well priced in, unless you have a significant weather event like a hurricane in the Gulf, you'll probably continue to see a range bound to lower numbers in the crude. Certainly the overall manufacturing production of crude is still coming out of the spigot, and they are fully in a contango, so they are bidding for storage. So until those things start changing, I think that we'll still see lower numbers first.
All right. Thanks very much, Zook.
Thank you very much. See you next time.
You got it. For TheStreet in New York, I'm Jill Malandrino.